Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I teach trading at Trading University. Before we get started, I want to point out a very important tenet of Dow theory. A market can retrace up to 2/3 of itself and still maintain its current pattern. That's a very valuable observation for all of us. First market we'll take a look at will be the Australian US dollar. I've gone ahead and highlighted our 25-day pattern. Generally, that's a reflection of day-to-day news flow. Also our 50-day pattern, a little bit longer term perspective. Both patterns very important to us as traders in helping to guide us with a trade selection and investment direction selection. Aussie dollar, it's been in the process of trying to carve out a bottom of that 69 even level. We've been watching that. On the other hand, it's kind of hard to get excited when you see these patterns down like that. Your shortest term pattern is the only one that's up. Look at that across the board from the 10, 25, 50, even the secondary pattern, all down. That's a pretty bearish chart, as we've been saying now for about a month or so. Interesting area to watch on the chart for sure, but nothing to get too excited about just yet. Throwing a thought out there on the fundamentals, particularly a little bit slower U.S. growth that we've been seeing. Overall, I think that a slowdown in the U.S. economy may be worse for some of our trading partners than us initially, particularly Australia, when they're still fighting those strong headwinds with the slowdown coming out of China also. So while again price-wise we may be closer to a bottom than not, time-wise it still may take a while to shake itself out here. Next market, the Swiss franc. This is a pretty bullish chart right here. You can see both the 25-day pattern and your 50-day pattern are both up. 10-day pattern up also. It looks like you tried to test 10-day support Friday on that slower than expected U.S. unemployment number. You couldn't get there, 96.35 or so. I'd have to say, even with somewhat negative U.S. numbers coming out there, this market's holding up very well. Fascinating long-term picture too. We pan out to a monthly chart and look at all the upside in there. If you're able to break out just above these most recent highs in here, right around 99 or so, we think there's plenty of room up above, and 105 would be our first stop. Look out on the upside. Next market, dollar index. Dollar index, pretty interesting chart. For these spikes lower, this market's still holding up pretty well. You can see that 25-day pattern is up. Likewise, the 50-day pattern is up just barely. You had a couple of closes above that significant resistance right there. You had that second close right there that actually shifted that all-important 50-day higher. When we get a shift in a major pattern like that, we don't necessarily run right out and get in a position. What we would do in this case, we'd look to buy a dip. Friday, you had a pretty good dip, by the way. Fascinating that despite that lower than expected U.S. jobs number, came in right around 150,000 jobs. They were looking for 200,000. Despite that, this market closed in the upper half of the range there. You put that long tail in there. So this is definitely one to watch. If you claw above that 96.50 level again, we don't think you're going to look back. We think you're going to see 98 even in a hurry, and a move above par 100 and beyond. So pretty bullish chart. You gotta clear 98.50 first though. Next market, the euro. There's your euro smaller box 25-day pattern. That's down. That's bearish. It's fascinating. Look at that very, very short-term 5-day pattern. Usually that's not that significant of a pattern unless you're a day trader, of course. What we do is we like to trade with the majority of patterns. We take any 3 consecutive patterns here and then we trade with the majority of them. So short-term trader, you're still selling rallies in this market. But what's fascinating is here's Friday's candle right there. You can see it, that big long wick right there. Higher prices got rejected. Your 5-day pattern is still down. I tell you what, I was teaching a class Friday morning and I would not have guessed that market would have got put back in the box as it did, so to speak. I really thought that 5-day pattern was shifting higher. On the other hand, it wasn't all that significant because you're still below resistance here. You got your 10-day resistance and then that all-important 25-day resistance up above at 114 even. But really the fact that this market could not hold those gains off of that lower than expected unemployment number, very telling. Overall, this is a pretty bearish chart. When you look at the Swiss franc, you look at the dollar index being bullish on those higher time frames, and you look at the euro here having a hard time holding any kind of gains. You put that all together and you'd have to think, hey, we're very close to a potential breakdown in this market, the euro. Last market we'll cover for now, the gold market. Gold overall, a tricky position. You're wound up pretty tight right here. Your 25-day pattern, your all-important 50-day pattern, they're both still down. On the other hand, you could switch that in a hurry. Big level right here, 1140 or so. If you can get above that level, you get a couple of closes above that level, you're going to shift both those patterns simultaneous. That's a big deal. When you can, if you can shift a 25 and a 50 at the same time, that's potentially a big deal. They haven't done it yet though. Very important resistance right there, right at 1140. Currently, gold down on these short-term patterns and those long-term patterns. So interesting setup here. You put it all together, tie everything together, all these markets we've looked at, and the dollar index itself, the US dollar, still looking pretty strong, still in the driver's seat. My name is Jay Norris. I teach trading at Trading University. Thank you so much, and we'll see you next week.